Health savings accounts are really, these are applicable to people that aren't part of an already established health plan provided by your employee. I don't think that's too applicable here, but read it because there are some interesting things you can do in there, and what it can turn out to be, and the reason I put it in here is it can make these deductions to a health savings account, which is an individual who's covered only by a high deductible health plan of your own, almost like another IRA type savings plan, because what happens is it's unlike the flexible spending account. It's not a use it or lose it. It's not that. See, it says there's no required distribution from health savings accounts. So the account can build up tax-free for individuals who do not need to request distributions. After age 65, distributions can be used for any purpose, not just medical. So it's kind of like, and this is often overlooked with them, another retirement savings vehicle. It has to be, it's typically applicable to people who have, again, their own businesses, but it can sort of serve as a backup retirement plan. Higher gas mileage deductions, that's nothing much to talk about there. Hybrids is nothing much to talk about there because they're phasing out the tax credit for buying a hybrid car. So let's keep moving. Single member LLCs. This one is a little bit important for you entrepreneurs out there. I talk about in my real estate class that if you buy real estate or property, to buy them inside of an entity rather than to have them, you own them individually. And the purpose of that is not for taxes, it's for liability purposes. It's that if you have multiple properties and you get sued on one, we don't want them to be able to go after all of your assets that you own individually. A little bit outside the scope of this conversation, but that's an overview of why I'm putting this in here. So if you buy something, you want to set up an LLC. That used to be a real big pain in the butt because you had to file a tax return for each and every LLC that you set up. But if it's a single member LLC now, it is ignored for tax purposes and you still get the sheltering for liability. So don't be afraid of it anymore. They're simple to set up. You don't need an attorney to set up a single member LLC. There's not going to be an operating agreement, meaning an agreement between a bunch of partners. That's complex. You can go on the internet and go to Georgia's Secretary of State website and fill out a few forms for free and set that up. It's totally ignored for tax purposes, but you can still own assets inside of it and great for liability sheltering. That's why I put that one up there. Organizational startup costs, nothing big to talk about there. Just that it used to be you had to, if you started a new business, you'd have to cost before you actually incorporated the business and started doing business had to be expensed over time, and now they're much more flexible on that you can deduct up to 5,000 of those in the first year. Qualified electric vehicle credit, let's not talk about that right now. No, I don't know anybody buying a 100% electric vehicle yet, but it's coming, and I don't even know if that's going to stay in the provision. Sales tax deduction, that is one we want to stop on. Taxpayers can elect to deduct state and local sales tax instead of state and local income taxes. You cannot deduct both. You can either calculate actual state and local sales tax or use the optional state sales tax tables found in the IRS. So if you have lots of purchases throughout the year, you may want to start keeping track of all your receipts for all your sales, all your purchases. And if your sales taxes are higher than your state income taxes that you pay, i.e. the amounts withheld for your W-2, then you can use that higher amount. That brings me over to one of the new provisions that I believe, give me a second here, let's see, new car deduction, new car deduction. One of the new things that came out with this stimulus package that was just brought out, not written down, this one you can write down, I don't have it on here, is a new car deduction, but it ties right into this one, that's why I'm bringing it up now. Effective for new vehicles purchased on or after February 17th of 2009. Obviously, we have a little bit of problem with people not buying cars right now. General Motors is about to go out of business. The Act allows qualified taxpayers an above-line deduction Above line deduction means that it's not an itemized deduction. It's better because itemized deductions are somewhat phased out by your adjusted gross income. You have to multiply your adjusted gross income by 3%, and then that number reduces all your itemized deductions. This is not subject to that. It's even better. And it's also not phased out with AMT. But basically, it says that all qualified taxpayers get this above-line deduction for all state, local sales, and excise taxes paid relating to the first $49,500, the purchase price of a new car, light truck, or other vehicle through end of the year. That's pretty good. If you buy a new car, you're going to get this as a deduction, even if you don't itemize your deductions. Okay, so, and you can still also deduct your regular property taxes at the same time. Don't forget that one. It's not going to automatically happen on your tax return unless you put it on.